Welcome everyone to another video of Small Business Treasury. And today I want to talk about a very big misconception between the accounting and finance department within an organization. And today's video topic is your accountant is not protecting your cash, Treasury is. So it's a very bold statement to make, right? Most small business owners think that the accountant is supposed to be responsible for the cash of the organization. They're supposed to be the ones responsible for making sure that everything is paid for. And the truth is that in small businesses and small companies, accounting, finance, FP&A, all those things get lumped into one small department because the organization isn't large enough yet to be able to withstand and to be able to have divisions or departments within the finance and accounting department. But the reality is, in large organizations, finance and accounting is very different from the treasury team, right? So one of the things that I've mentioned in the past in previous videos is that accounting looks at what has happened in the past, and treasury is protecting what is happening today, right? So I'm looking down on my screen here. I'm looking down here to my right side to make sure I'm looking at my notes. I have everything pulled up, and a lot of the things is in business, whenever you're reporting financial statements and daily liquidity and profit and loss statements in the small business organization, all of those things are in one category. But as your organization grows, they should be implemented into separate divisions in other small divisions within the finance and accounting structure, right? Now, it's also important for these healthy divisions to be implemented early on. Now, that doesn't mean go and hire a bunch of people, because you're not in an organization where you can hire a bunch of different finance professionals, but it is important to segregate those duties within the finance and accounting structure, right? So a lot of misconception of the accounting and finance and treasury comes from what we know about the basics of business, right? Accountant is supposed to deal with the numbers. He's supposed to deal with the tax filings and all of those things in a business structure. But the Treasury Department is what deals with your day-to-day activities, to making sure what happens today, to making sure you have enough cash in the bank to cover any expenses that are going out in the coming days, in the coming weeks, and in the coming months, right? So a good example to think about whenever you're referring to this, to trying to analyze and picture the structure of finance, accounting, and treasury, is accounting will be able to bring something to your attention after it has happened, right? If they're doing their monthly reconciliations, they come to you at the beginning of next month and say, hey, by the way, this happened last month on this date, and we can't determine what this payment was for. Okay, but how is that going to help you in the day-to-day activities? In the day-to-day activities, Treasury is responsible to making sure that you are fully aware of what is going on in your daily activities, right? So the importance of a finance and the segregation of duties between finance, accounting, and treasury is that Treasury, whoever that individual within your organization is, whether that's a CFO or an entry-level accountant, or maybe it's the same individual, but they have segregation of duties and they have clear roles and metrics that they have to meet on a daily basis and responsibilities that they have to report to, you are fully aware of what's going on your daily activities. One of the biggest things that Treasury prevents is overdrawn accounts, right? Because on paper, you could be very profitable. But just because you're profitable on paper does not mean you have the liquidity available to cover all of your expenses on your daily basis, right? And we could give an example. Let's say you have a very profitable construction business. You get paid every 30, 60 days from your clients, but there's a period in the month where you are not able to cover your ongoing expenses because you have not received payment from your clients yet. That's an example of how Treasury steps in and is able to determine how are they going to cover that gap between your accounts receivables and your accounts payables. In other words, your receivables and your disbursements, right? Treasury's role is to create that bridge between those two functions, okay? An accountant is not going to be able to do that because they look at what has happened. They're looking what happened last month, and they're reporting and they're making their financial statements, and they're making sure that everything is properly recorded in the GL, and making sure that the taxes are being prepared properly. But they are not responsible to what's happening on a daily basis. That's why in large corporations, those roles are separated. You have the accounting team who looks at what's happening, you have the finance team who's looking at what's going to happen, and you have the treasury team who's looking at what's happening today. All right, so think about that. Okay, whenever to just simplify it, accounting is looking into the past, treasury is protecting and managing cash today to making sure you are able to have liquidity to cover your bills today, right? Because making sure that your vendors are paid and happy and satisfied is allows you to your business to continue to grow and continue to be profitable and continue to be very, very successful. All right. So another role of the Treasury Department is to make sure that there's fraud prevention of fraud losses, there's prevention of cash shortages, preventing of bad banking setups, and preventing of uncontrolled payments. Right. So if you think about it as an accountant does not deal with any of these activities on a daily basis. Maybe in a smaller organization they have a little bit of experience in a little bit of everything. But in a larger organization, these types of functions are covered specifically by the Treasury team. Okay, so if we look at a large organization, right, and I can give you my example from where I'm currently employed. A large organization, you have the CFO, you have various divisions of the accounting finance team, right, and then you have the treasury team with this, which is within one of those niches as well. If I look at my organizational structure, I can give you an example of how these roles and segregation of duties are separated out by department. And I can tell you right now that the accounting team rarely logs into the banking platform as much as the treasury team does. The treasury team, we are in the banking platform 90% of our day. That is our core responsibilities, making sure each of the accounts are fully funded, making sure that there's no overdrawn payments, making sure that everything that needs to be approved and released is approved and released properly, making sure that we need to move money around, making sure that if we have excess capital, we're moving into the money market fund to making sure we're collecting interest, right? All of these tiny, small things on a daily basis regarding cash management falls on the treasury team. And I mentioned this in the past. Treasury is a corporate language for just cash. So whenever you hear the word treasury, think about it as just cash management, liquidity, daily banking operations, anything related to fraud prevention, banking, cash movement, investing, and money market funds, high yield savings account. All of these things, they fall under the Department of Treasury. That's the Treasury Department. Treasury equals cash management. All right. So if you look at many online postings, you'll see treasury, cash management, treasury, cash manager, right? Anything related to cash that falls into treasury. So in your organization, you need to be properly knowledgeable to determine, okay, accounting is past, finance is future, treasury is today. Treasury makes sure that my bills are paid today. Treasury makes sure that you're following up with your account receivables team to make sure you're collecting payment. All right. Treasury is making sure that if you have excess cash available, it's being put into the money market fund to make sure you are collecting interest on that idle cash. Okay, that's the role of Treasury. Treasury is to very much involved in your daily banking activities, daily operations, daily cash management. Okay, so that is the big difference between the misconception that accountants or the accounting department is responsible for those operations, which in smaller organizations they are. And as you as a CEO, the C-suite or the founder, you need to be able to segregate those duties properly, because as your organization grows, which is the goal for all of small and growing businesses, as your organization grows, you have proper structure in place. That doesn't mean go hire 3 or 4 different accountants or 3 or 4 different finance professionals. No, but you have the proper protocols in place, the proper structure in place to make sure accounting deals with accounting, finance deals with finance, treasury deals with treasury, right? And in the beginning, one individual can do all of that, right? They can focus a portion of their hours in the morning for accounting, a portion of their hours in the middle of the day for treasury, a portion of their hours in the afternoon for finance. But at least there's structure in place. There is a structure, there is segregation of duties for each department. So as your organization grows, you have a clear separation of roles and you have clear responsibilities for each of those roles, right? But it's important to understand how vital Treasury is as an ongoing organization, Because if you don't manage your daily operations and your daily cash activities, your business is at risk for being overdrawn, being bankrupt, not being able to manage proper vendors, which is going to lead to poor poor outcomes of products and services, right? In business, relationships matter so much. That's also another vital part, role of the Treasury Department or the Treasury individual, the Treasury team, is to manage those relationships with the bank, because it could be a situation where you need to cover a couple 100,000 between when you're going to get paid from your clients and when you have to get paid, you have to pay out your vendors. And in between that gap, you may be short on cash. Maybe you need some sort of bridge loan or line of credit in between that to cover that 1 or 2 weeks that you'll be off for. And that's the role of the Treasury Department, the role of the Treasury individual, to have that good relationship with the bank, to say, hey, by the way, we need to pull from our line of credit or our revolver or some sort of short-term loan so we can cover our payables until we can get our receivables back in order, right? So the Treasury individual is responsible for that type of relationship. Now, of course, again, as a small business and a growing business, this could also be shared by the CFO, but it's the responsibility of the CEO and the founder to be able to delegate that responsibility to the CFO and say, hey, these are my expectations as you as a CFO, you as a head of accounting, you as a head of finance. You will be able to wear multiple financial hats, between accounting, finance, and treasury. And this is my expectations for the treasury side, because treasury is a vital role to making sure that there's enough capital within your organization and also to protect your capital. Treasury's role is to protect capital, to prevent fraud from happening, to prevent things from wires and ACH from being released without your knowledge. Treasury is a control function. Treasury is checks and balances. Treasury is making sure that nobody of your internal employees are stealing from you. Treasury is to make sure that you are not falling victims to phishing attempts or to fraudulent individuals. Those are all the role of Treasury. Now, whether that's done by a variety of different people or one single individual within your organization, that's completely fine. But the segregation of duties and responsibilities and metrics have to be there and clear for each of those departments, especially the Treasury Department, because Treasury is protecting the cash, protecting the capital that you work so hard to get. Think about it as a business owner. Many business owners start off as very good sales individual, and they go out and they're able to close a bunch of deals and engagements by using their very unique skill sets. And it was very hard work to obtain that business. It was very difficult to obtain that $250,000 contract with some sort of engagement, and then only for you to find out many weeks later that your organization was targeted, because it was a growing organization and they were targeted to be by fraudulent vendors, and then you've lost a quarter or half of that income that came from that engagement, right? Because you as a founder and a chief executive did not have proper treasury protocols in place and clear expectations of your CFO to segregate and implement those policies and procedures, right? So the accounting individual is responsible for accounting. Finance is responsible for finance. Treasury is responsible for treasury. But as you as a founder and the leader of the organization need to have clear expectations for each of those roles. So as your organization grows, you're able to scale it and you don't have to worry about being victims because you have the structure already in place. So I focus on the treasury side. That's where I come in and try to educate small business owners, because I know what it's like working at a large organization with $1 billion in revenue, and I know what it's like coming from a small business, because my family has small businesses. So I know both sides. My role is to help business owners implement the structure and the policies and the procedures and the strategies that we use at large corporations into their small business, because it doesn't cost anything but time and effort to just research, learn, and implement, right? Treasury is not something that is expensive to get started and to implement to your organization. No, it just requires knowledge and effort. It requires learn, be aware, and delegate to your CFO to implement. That's the role of the CEO and the founder of the organization, to learn these, become aware, and then delegate. And these videos are my role, and my job is to help you understand the importance of it, to making sure that you at least are aware and you're able to delegate the responsibilities to the head of accounting, head of finance, or CFO, or whatever it may be. Anyways, that's all for today's video. If you have another question, please put it in the comments, so I have a variety of different videos that I can make educational information on, and just take my corporate experience and share it with all of you.